All right, good afternoon, everybody. All right, I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer, and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Today is Monday, March 24th. A position disclosure update. I am out of my TQQQ long. That's exciting. Paid well. I did keep a little bit of Tesla short. I probably shouldn't have. I think it's too early, to be totally honest. But getting into that 280 big move today, I did keep a little bit, but I'm going to keep a tight leash on that. It's not really the bigger picture trade that I'm looking for at this point. Palantir, I have purposely started to build in early, again on the short side, knowing that I'm probably too early, but not minding having that on my books just in case I'm wrong and we don't bounce as much as I've been looking for from this market. So that one's a little bit bigger picture. Tesla's a little bit smaller picture. Jumping over to the charts, big up day. Big update. We had ourselves a good old-fashioned breakaway gap today. I feel like we haven't had one of those in a while. SPY's up 1.8%, Q's up 2%, IWM up 2.5%. Big upside day. TLT down over 1% today. So interest rates are higher. So unwinding of a little bit of a fear trade with the market moving higher, primarily moving higher on some rollback in the language from the administration on the tariffs, and the dollar up. So I mean, it's just the same thing. It's really been as simple and as difficult because we never know what's going to be said and when it's going to be said. But every time tariff reductions get announced, the market moves higher. That's why we gapped up so big this morning. Every time additional tariffs or new tariffs or added tariffs get added, the market goes down. I mean, we even had a short-term peak today on this 1255 candle because Trump announced he was going to be doing tariffs on cars and pharma. And then in the afternoon today, he once again made a comment that tariffs might be able to be significantly less, and then the market went up again. So I mean, again, it's just it's really as simple and as difficult as every time the administration says more tariffs, we go down. Every time they say less tariffs, we go up. Obviously, it's not as simple as that. There's a lot of nuance, I think, based on positioning and market dynamics that started to create these last couple weeks a little bit more of a floor to this market for even when bad news comes out. And I think that we are also set up here in a way where when good news comes out, it actually makes it easier for us to move higher. But that good news and that bad news certainly still helps to propel in those directions, either hold us down into some demand, into some support, or release us to be able to break up. So really strong day today. Again, a good old-fashioned breakaway gap. SPY 570 is the huge level. We gapped above SPY 570, whether you include the ex-dividend from the end of last week or not, we still gapped up above 570. So it was a breakaway gap. We gave continuation today. We closed almost 575. We closed above the 21 EMA. It's probably better to look at the SPX right now because the SPX doesn't include that pesky ex-dividend from the SPY. And you can just see here really nice, solid close above the 21 EMA. I think even just as far as a short-term bounce goes, I had been saying for the last week or so, though it certainly required some patience, that into an up move, an overshoot of that 21 EMA is very possible, mainly because it doesn't seem like people are positioned properly for an up move, broadly speaking. So seeing us rally up to SPX like 5,800 or so, 5,820, I think is very possible on the upside. I mean, that's kind of in conjunction with what I've been talking about an SPY move up to 580 as an overshoot of that 21 EMA, catch everybody off sides, and then we can kind of reassess things when we get up there on if this can turn into something more or not. But these markets right now, with lower liquidity and gamma sitting at closer to zero, just really have the potential to give us big moves in either direction, and that includes into these bounce moves, and it's not even entirely impossible for these bounce moves to turn into something significantly more on the upside. I'm just not ready to call for that at the moment. I'm not ready to call for necessarily an absolute pivot high at SPY 580 either. That brings us back down to lows. You know, kind of just wait and see mode. But certainly a great day to finally give us patient buyers an opportunity to be able to make some money. And it was especially great follow through after the awesome call out we had to buy the gap down on Friday morning. Friday morning, we had a decent sized gap down. It might have been a little bit scary, but it was a gap down that was holding above the March 18th pivot. I felt that there was plenty of reason to believe that there was just underlying demand for this market into down moves right now. It turned into a great opportunity to buy. We closed well on Friday. That gave you the opportunity to add to swings from the gap down yesterday. If you kept any swings over the weekend off that, you got absolutely paid for it today. So market looks great. We are into our upper band of equilibrium. Technically, this is what I would normally consider to be like target number 2 of a bigger upside bounce on a counter trend move. So it's a great spot, I think, today to be booking profit on longs that you have from Friday, longs that you have from last week, longs that you have from these absolute lows. Great time to be booking profit. Not ready to be 100% out of that though, because I do think, like I said before, that we have the possibility to really overshoot this market to SPY 580 or so, which at this point is only $5 away, or QQQ 495 to even 500 on the upside. So at this point, we're starting to get close there as well. But I still think that where we are now is not a good risk reward for new longs. You could make an argument to me, and I would say that you're not necessarily wrong about potentially looking to short even here, but I am still of this thought process of this market giving an overshoot. All the same though, my target on the T-Q position I had was really that 21 EMA on the daily, so that when I got fully out of it liquidated today, was not always the easiest trade. I started that one a little bit too early. I think I started buying it on March 10th here. But finally got to my target, made money on it, even if it wasn't easy, stuck to the game plan, and it paid. So that's most of the indexes. The IWM here also same deal, good strength above the 21 EMA, could work its way to 212.50, could even work its way up to 215. So let's see what sort of continuation we can get. But with that said, I am piecing out of my longs on the way up at this point. It seems like a lot of people might be off sides and not have necessary long exposure. So I'm giving them something that they can buy into as I slowly piece out of positions of reduced size on the way up here in almost everything that I've had. So we'll see if things can continue more to my targets or not. But this was a great move for a lot of us who have really been looking for this oversold bounce back to happen in the market. I don't really have too much else to say about it. I mean, we're definitely led up by the things that have been down most. We're led up by Mag 7. We're led up by the short basket of stocks, the meme stocks. That's exactly what we were expecting if the real bounce came in. I talked about it a number of times over the course of the last week or so, that if we can break up, it's probably going to be a lot of these growth names or some of these Mag 7 names that lead us. And it's almost like a little bit of a mean reversion of the mean reversion, where they just so brutalized in a short period of time growth. As you can see an ARC here, or Mag 7, which I don't know. Is there an ETF that's specifically for Mag 7 that I could type up when I want to look at just them as a whole? I don't remember, but they beat them up so much that seeing those really lead the rally today does not surprise me. Seeing Palantir lead the rally today does not surprise me. Seeing Tesla lead the rally today does not surprise me. Literally just said 2 trading sessions ago, I didn't take it. I didn't want to be involved, but we called this out on Friday's morning meeting. On Friday morning, Tesla was showing relative strength. Everything else was gapping below Thursday's low. Tesla was not. Tesla gave you the inside and up. We said it could be a buy through 238. 240 was also a level that you could look at. It closed with great relative strength on Friday at 250. I've been saying 280 to 300 on the upside is a reasonable target for that bounce. Here we are. one day later and it's already getting to 280. So incredible fast upside move in Tesla. Not surprised to see it at all. I'm still interested, and I know I kept a little bit of Tesla short overnight, but I'm still interested in actually looking for a signal as Tesla gets closer to 280 to 300 for a short. But in truth, I don't really want to be doing a lot of heavy shorting until I feel more confident that the market is ready to actually give us a pivot high. And I'm not confident here that the market's ready to give us a pivot high. And I'm not even necessarily confident at 580, but 580 would really be the spot that I would look at, where it's like, all right, if we could get to 580 in the next couple trading sessions, it'll be like, wow, we just went from 560 to 580 in 3 or 4 days, let alone that we were just at 550 the week before that. And then we're extended enough actually to the upside at that point from those moving averages that it makes a lot of sense to me to look for the short at that spot if we get up there, maybe, and have that maybe be a little bit bigger picture. But now I'm kind of just starting to repeat the same things. So I think that basically covers everything I got. AMD, incredible continuation. We mentioned this one in the meeting. Probably a little bit tricky to get stock because you had to pay up, but incredible continuation. NVIDIA not quite as good, but giving a strong close above 120. So NVIDIA trading well also. Just a really solid day for bullish participants who are looking for this bounce. So we finally got it, and I guess that's all that I got. So I'm happy to take a look at any questions or anything that you guys have to say. Best quarter last week, the bag 7. Yeah, the lag 7, the bag 7. That was good. Mags? Oh, okay, cool. Mags. Roundhill Magnificent 7 ETF. Thanks, Tate. Oh, MGK is another one. Vanguard Mega Cap Growth ETF. Not 100% sure what's in it, but sure, probably similar. Oh yeah, that FNGA. Forgot about that one. That's another one. Oh, that's the levered one. Levered Fang, FNGA. FNGU got delisted. All right, let me take the questions in the order in which they were received. Starting from Eli. For the next few days or so, how should we approach the intraday action considering we are saying it's probably too early to start short, but buying these prices isn't the best risk? Sure, the best risk reward. Sure, so a couple thoughts on that. One is you can always day trade, right? I prefer to take a top-down approach, a bigger picture down, a small picture approach. I think that the best profit-wise trades come from the big picture, even if they're executed on a small picture. But you can still look for opportunities to put on cute short day trades. I probably didn't trade Tesla very well today, but like Pat traded it really well. Just how he was, putting on some cute extension shorts, covering them quickly, getting out of the way. Like there's opportunities to be able to do that, even when the bigger picture of the market itself is, even when the bigger picture of the market itself isn't set up for as good of a risk reward. With that said, on the bigger picture, this is just how markets work, right? Not every day is the same. Not every period of time is the same. There are periods of time where there are better opportunities, and there are periods of time when you just don't have as good of a setup. You don't have as good of a risk reward, and that just means that you want to trade less. You want to trade less active. You want to put on less risk. You don't want to push things when it's not there. So a big part about successful trading is just knowing when things are lined up in such a way that you should be pushing it versus knowing when things are lined up in such a way where they shouldn't be. On Friday morning, I gave a fairly gung-ho morning meeting that I meant to try to instill confidence in buying this market on. And I think that that was a really good opportunity to be buying that gap down, as opposed to today, massive gap up almost into a declining 21 EMA. That's just not a good spot for new longs for sure. And like I was saying earlier, you could make an argument that it's a good spot to start some shorts. You wouldn't necessarily be wrong. I just have been of this thought process that with the way positioning is right now that we could very easily overshoot on the upside. So I'm not really ready to jump in there. So, two-part answer, I guess. One is you can focus on just some intraday trades and doing it with a little bit of lower risk to create some cash flow for yourself. And two is from the big picture, sometimes it's okay just to sit on your hands when the opportunities aren't as good, but you also have to be able to recognize when the opportunities are good, big picture, and then really be able to lay into them. From Tate, is there an ideal time to swing long levered ETFs for an extended period? Would it be after market corrections or deeper pullbacks of at least 5%? I saw some Twitter banter about this over the weekend. I wanted to hear your thoughts. Yeah, I never really tried to classify like an ideal time, holding time for levered ETFs. We do know that they decay. I think that this got chatted about in a little bit of a different way somewhat recently, where someone showed some data that once you hold those levered ETFs for like a month, it just becomes not worth it. So I'd say generally speaking, anything less than a month, but more ideally, you want to be able to take advantage of periods of time of market expansion with them, because that's when you're going to get the most bang for your buck and not have to deal with necessarily as much decay, and you get paid faster. So that's the hard part, is figuring out, well, when is this a period of time of market expansion? So maybe into that like deep extension, kind of like you're talking about. You said deeper pullbacks, maybe more like deeper extension, or just periods where you can catch a bigger move. Like, I don't know, this is not like a perfect real world example, but if you could have been just short 3x levered ETFs from the high to the low, that was a very, very fast move in a short period of time. That's going to be where those 3x levered ETFs can really pay you. How long can these fast moves last for, then is the next question. Because once they start going into consolidations, you deal with more decay. So how long can these fast moves last for? Well, this one lasted for about 3 weeks. They could be more, they could be less. So, but I would say generally speaking, pointing back to just the decay data that we looked at like a week ago, or that someone brought to the table like a week ago, you probably don't want to be in those things for more than a month. Are you a big proponent of the death cross in NVIDIA? No, I'm not. I don't even have a 50 simple moving average on here. I've never been a big fan or proponent of moving average crossovers to begin with. I don't love them as a signal. The death cross and the golden cross get a lot of chatter because it's the 50 over the 200 day. But I think what matters more than anything is not necessarily the moving averages being above one or the other. It's more about the slopes of those moving averages and whether or not they're indicating that there is time frame continuity across multiple time frames of trend or not. So that's what I would point to. Thanks for the question there, Varun. So I got through everything in the YouTube for the moment. The VTF for the moment. So let's pop over to the YouTube. See what's happening. Pulling it up. Steven also saying mags. I'll try to remember that one. From Liam, do you mind giving your opinion on Adobe from a trading perspective? From a trading perspective, I hate trading Adobe. It's too expensive. The spreads are too wide. I don't like short-term trading in names that have very wide spreads. Very wide's a little bit subjective. That's not to say I don't trade names with very wide spreads once in a while. I do. I just tend to shy away from them. These $400,000, $500,000 stocks that trade with dollar-plus spreads just tend to be not something I have any interest in. I don't really watch Adobe very much, to be totally honest, but I'm pretty sure that you very regularly see 50 cent to $1+ spreads in it. It's just generally going to be not something that I want to be trading. I just don't like dealing with the slippage. I don't like having less stock, which gives me lesser game planning flexibility. So it just tends to be not what I want to trade. The technicals here on Adobe don't look good at all. Whatever this gap down was, I don't know if that was an earnings report or what, but it's holding below it. This ADMA caught up. It's a bearish consolidation that's beneath support. So I wouldn't necessarily consider it a bear flag. Yeah, you could probably call it a bear flag. It's downtrending kind of into it. I'm a stickler on some of these definitions. I think, as you guys know, bear flag versus bearish consolidation. The difference is that a bear flag has would have a downtrend into it. So the question is, was there a downtrend in Adobe into this pattern? You could make that argument. It's kind of sloppy though. It's kind of a sloppy pattern of lower highs and lower lows. So whatever. It's either a bear flag or a bearish consolidation. Either way, it's beneath support and the ADMA cut up. So I think that the technicals look pretty bad on it, and just not a good name to trade. Apex Joy, does NU look good? Someone brought this name up recently. I think Nucor looks okay. Above this $11.80 to $12. I haven't traded in a while, but I think it's worth keeping an eye on. Okay, LO's all the way back down, huh? What else, guys? Anything? We covered Boeing overhead resistance, like you talked about in the morning. Yeah, I mean, I don't have anything else to add on beyond what I said this morning. 185 to 187.50 is big resistance in Boeing, and then you've got even more resistance above that. 190 is a little resistance, 200 area is resistance. So I find the name to be tough to trade. I know you seem to always be trading it, so maybe you think differently than I do, which is obviously fine. But I always found the stock to be very difficult to trade, very sloppy. It's extended into resistance. For me, that's a reason to sell some to book some profit. Charter Braxton Worth? I have no idea who that is. Technician on Fast Money. I don't know, because I don't really know who he is or what he thinks about certain things. To me, this doesn't look like necessarily bearish to bullish necessarily. Stock maybe above 200, I would say that this thing starts to look more bullish if it's able to get up there. And certainly not if it does it in a straight line, because like Pete just said, the stock is a bit extended up here. So for me, I'm just looking at an extension into resistance. If I was long Boeing, I'd be selling it into this area. Thanks. From Tate, is this AMD move real of just another huge lower high, probably too market dependent to give that far of an outlook? I really like how this AMD chart looks. If I was more confident that we were in just a normal bull market environment, I would really, really be loving this thing. I do still think, like you just said, it's a bit market dependent, and I'm just not certain enough about the market beyond this oversold bounce, which I am looking for. Though April seasonality tends to be pretty strong, I think, in the first half of the month. We'll see what happens when we get there. I think AMD looks phenomenal. Broke resistance, consolidated above that resistance, broke higher again today, broke the downtrend line that it's been in for months now. I think the name got pretty cheap beneath $100. It got pretty hated compared to NVIDIA for a moment, and then we started seeing some good headlines that were coming out of AMD about their ability to step it up and compete. Whether that's true or not is to be seen, but the headlines were certainly there. So I like this AMD a lot. I think you could certainly see $120 on this on the bounce back. And then beyond that, I don't know, let's take it one step at a time based on what the market information is giving us. Over on the YouTube from Steven, so you're still cautious with your saying the biggest rips happen in bear markets? Yeah. So again, technically we're not in a bear market, but when you have the fifth fastest market correction since 1950, and market structure that's set up in such a way where people would have to potentially grab into upside on the way up. I'm not convinced. I'm just not sure right now. Right now what I'm getting is exactly what I was looking for, which was a big oversold bounce in the market that I think still could give further legs. Beyond that, I really don't know. I really want to see what it looks like when and if it happens, and what the data looks like when we get there, and then try to make the next set of judgments on what we're going to do. We're also just in such a fast-moving environment right now on how the news changes. For all we know, after what the Trump administration was saying today, he might end up getting rid of tariffs entirely. I don't know. It seems like he changes his mind every few days or week or whatever. Because today we moved higher on tariff relief, and who knows what that turns into in a week from now. I really don't know. The oversold bounce technically makes sense to me no matter what, regardless of the big picture. Though obviously the big picture is helped by headlines today. As we get closer to a deeper bounce back, at this point in time, I could really see two different outcomes. I could see the outcome of continuation and supported by economic numbers of growth slowdown and rotation out of the U.S. and into foreign markets that would weaken us out again and create a big picture pivot high, and then maybe we even work our way back down to lows. I could see the opposite occurring, where we get up to this 580, 582, and people still aren't positioned properly on the long side. Everyone's hedged for downside. No one's hedged for upside. Next thing you know, we're getting relief on tariffs, and we're getting corporate tax cuts. Seeing Charles mentioning that in the VTF. I've mentioned that a few times as well. I don't know what those tax cuts are going to look like, but I think everyone's expecting that there's going to be an announcement eventually. It's just a matter of what that looks like in terms of timing and how deep those tax cuts are. I mean, I don't see any universe on the surface of things where tax cuts for corporations in and of themselves could possibly be bearish for stocks. It's super bullish for stocks. Maybe you could make a deeper argument on if tax cuts are cutting from tariffs at a time of lower growth. Sure, maybe they pay less taxes, but they're paying less taxes on less earnings because growth is slowing down, and that maybe is a bearish argument, but that's like, I don't know, you're really getting into the weeds there and really kind of pulling for that. So that's what I'm saying. I really don't know. And the headlines are changing so fast. I just want to, at this point, take things one step at a time. As a team, we had a couple phenomenal calls over the course of the last 2 months here, calling for a false breakout of this 3-month consolidation when every technical analyst out there was becoming a huge bull. We were saying, look for the failed breakout. I'm net short, look for the failed breakout. Bam, we got that. And then just as everyone seems like they're getting maximum bearishness and the sentiment was turning super, super bearish, we basically at these lows started saying, let's not look for a bounce, let's look for a big bounce. And then bam, we got it. At this point, we'll see if we get a little bit more on that bounce, but I'm not ready for the next huge call at this point. 2 really good ones in a row. Definitely I'm not always perfect on that stuff. No one is. But I just want to get more information. And when I feel uncertain, I'll say I'm uncertain. Right? I had a lot of conviction in the short up here and a lot of conviction in the long up here. Into this area, I'm more uncertain as the picture is changing very quickly. I want more information. And this goes back to what I was saying a little bit about Eli's question earlier when he was asking, well, what do we do here? And a lot of trading is knowing when you feel like things are really lining up so you can have a lot of conviction to put on a lot of risk, and knowing when you don't feel like things are lining up and you don't have as much certainty and it feels more like a coin toss, and then having significantly less risk. So I could tell you for me personally, and I hope it's this way for a lot of you guys too, I just did so well in this period of time that if we end up getting to SPY 580 and I ended up taking off a lot of long exposure, and then next thing I know, I'm sitting for a month with significantly less exposure on either side of the market and tighter P&L swings, I am very fine with that. I'm very fine with that because I just did really, really well off of a couple really big calls. And also, I would, from a stress perspective, would relish in not having as much conviction for a little while, having less exposure, and actually reducing my P&L swings a little bit. Because some of my P&L swings over the course, this is just talking to me personally, over the course of the last month and a half or so, have just been I've been having the biggest swings of my entire career, which is a good thing because it's what career progression as a trader looks like. You want to be getting bigger over time, but I would love to actually just have a little less exposure, trade a little bit less, have some tighter P&L swings, and enjoy the spring weather as it starts to come. So we'll see. But appreciate the question there, Stephen, over in the YouTube. Did I miss a question from Eli? What areas of interest would you look as good spots to buy into AMD, assuming we keep pushing higher? So it's tough now. This is another one that's tough now. I don't think that you could responsibly buy AMD 114 right now with where the market is, with the amount of bounce that happened from it, especially after we already gave a few pretty good long calls over the course of the last couple of days. So I don't know. Markets work in periods of consolidation and expansion over time. But another way to think about the fact that markets work in periods of consolidation and expansion over time is that markets work in periods of setup and play out, for a little bit of a better, I don't know, lack of a better term. Meaning those consolidation periods are setup periods. There were setups in here when it developed this 150 to 102 resistance, but we were able to see some relative strength start to come into the stock, and it was holding up a little bit better, yet was going sideways. That was more of a setup period for the stock. Now, when it gives the acceleration, whether that is because the trade is working or because the trade is failing, and you get that acceleration, that is the time to get paid on the previous work that you did, and then wait for a new buildup of a new setup. So what does that next setup look like for AMD after today we're at 114? I don't know. In the same way that I don't really have a lot of conviction with where the market goes from here. Maybe we get a nice little bull flag. Maybe we get like two tight inside days in a row to create a shooter. The ADMA catches up and you get momentum continuation. Maybe we get further acceleration up of this expansionary move to 118, 120, and then you get a big topping tail with a ton of expansion. And in fact, the next real setup is actually a short setup. And then maybe that expansionary short setup, that extension short setup, leads to a retest of a previous level that then becomes finally your next long. I don't know. I'm just throwing out some examples of things I've seen in the past and that I wouldn't be surprised to really see again occur in the future. And I hope that helps. Can you talk resistance on the IWM? Sure. There's resistance, a little bit of resistance, I feel like, at this like 210-ish pivot high from this big doji day on this high volume, 209.77. Then your next real resistance area is like 215. But I wouldn't be surprised if, like, as you approach that resistance, you find resistance, meaning once you start getting into like 212.50 to 213, you start to struggle a little bit in approaching that 215, especially if you do it quickly. So that's what I would look at there. It was supposed to be a lower rate trade. Oh, correlation between the IWM and interest rates. So we've talked about this in the last few weeks a little bit, because the interesting thing about interest rates with the market is that the relationship between interest rates and the market is something that constantly evolves. based on much more macro stories. So I don't think that there is ever a period of time where you can always say interest rates higher means stocks lower, interest rates lower means stocks higher. I think it's constantly changing. And one of the main ways in which that changes is when TLT becomes a fear trade. So up until the last, let's say, month and a half, when the TLT was moving up and interest rates were going down, that was viewed as bullish for stocks. That was viewed as bullish, especially for the IWM. More recently, though, the change in the TLT trade has been that it's become a fear trade. So now, yeah, when you get TLT moving higher and interest rates are moving down, that's technically good for stocks, especially like IWM stocks that might need to refinance debt and can do it at lower interest rates. But if TLT is moving higher, in fact, as a fear trade because of lower growth, then it might not be good because it's like, okay, what's the balance here? These IWM companies, they can refinance at lower rates, but they're refinancing at lower rates into a, let's say, weaker economy where their businesses aren't doing as well. So what's more important, the refinancing at lower rates or the fact that business is slowing down? Not to mention that if TLT is getting bought up as a fear trade, that fear trade just inherently means rotation into bonds, not of stocks. So that's automatically going to create some heaviness to stocks, even if interest rates go lower. So that's kind of been the change in the rate trade that we've seen over the course of the last month and a half. And that could change again tomorrow because that's just the nature of these things. It's a constantly evolving story. Sometimes we have it for a specific way for a certain period of time. Sometimes we have it a specific way for a long period of time, for years even. But especially this interest rate story with stocks is something that changes based on all of the other kind of macro things that are occurring. So appreciate the question, Varun. Enjoy your yoga class. TTD gave a nice bounce back today. It got above the 80 EMA on the daily. It got above this most recent resistance that it had been building out here above this $57. So similar to the market, TTD gave us a breakaway gap. I was glad to see that TTD participated decently. It's up 5.5% today with the SPYs and Qs up 1.82%. So again, that's kind of what I would expect from these types of names, is to actually outperform the market into a bounce. It'll continue, I think, barring any negative news that could come out. I think it'll continue to be an outperformer into the up move. I would like to see TTD work its way back to the 21 EMA, which is currently sitting at around $65. So mid-60s is what I'm looking for the moment on TTD, especially with any degree of market continuation. Yep, Tesla trading up further after hours. We'll see how it gaps tomorrow. All right, that is all that I've got. Looks like we got through the questions. Have a wonderful night, everybody. I will see you all tomorrow.